Good afternoon, everyone. Welcome to another episode by Mining Store. This is Will speaking, and today I'm going to be going through a bit of a market rundown in general. We're going to be going through a couple of market assets, including the Dow Jones, the ASX 200. We're going to have a look at it, silver and gold comparison as well. And of course, we're going to have a look at some Bitcoin charts as well. Before I get started, I just want to put a bit of a word out to everyone. I hope everyone's doing okay during this time of isolation. It's something that a lot of people have never really experienced before, but it's so important right now just to take care of your friends, family, your health, stay positive, stay occupied, and of course keep in touch with the markets, which is what a lot of the people in the Mining Store Discord are doing right now. Educating themselves, really looking at things that they've never had time to look at before, understanding financial systems, financial markets, monetary policy, different asset classes, all these kind of things. Personally, this is what I've been keeping myself occupied with. I haven't revisited a lot of my, I suppose, studies since I finished my uni degree, and it's been a really good time, I suppose, to really knuckle down into it and understand what's going on. So today I'm going to give a bit of an insight to the Mining Store Discord, talk about the kind of things that we discuss in there, and I'm going to relate that back to some of the knowledge that I've learned over the couple of weeks as well. Well, first of all, let's go and have a look. Something that I've been looking at is obviously the ASX 200. One thing that's been going on here is obviously we've seen a massive market decline. To be honest, personally, I believe that this was, whether the coronavirus came about or not, this was an event that was ready to happen. A lot of people are talking about, these ridiculously low interest rates. How long can we really just keep pushing on in a bull market? And as we know, the higher that we push on in markets, as for example, we can see in 2007, 2008, usually the harder the decline that we see. Okay, I've put a bit of a simple regression model on here. So as you can see, this midline is, I suppose, your median line, and then the top and bottom of it would be extreme market highs and extreme market lows. And as you can see, we pretty much reached the top of that regression line, and we've seen a massive pullback. Now, this pullback is very different to the 2008 GFC, very different to past GFCs or financial crisis that we've seen, because we're also in a pandemic right now. Relating back to that, and just for everyone out there, this is my personal opinion. I mean, you'll see different opinions out there. It's not financial advice, and you shouldn't rely on it. You should do your own due diligence. But I'm just giving you a bit of an insight of what I've discovered through talking to people within my network that I trust a lot. And obviously a lot of that comes from the Mining Store Discord, which we'll come back to. Okay. But basically, as you can see, we've pushed down to, precedented lows. I don't believe this is the bottom of the market yet. This is obviously a massive market capitulation, but we still haven't really seen the full effect of the coronavirus on the economies. I know it feels like a long time that we've been in isolation, but really it's only been maybe a month or so maximum for most people. And when businesses start releasing their earnings reports and showing how long this is really going to take to recover from this, I do believe we are going to see another leg down. The lowest that we saw in the ASX was 4,400 down at this mark here. And, we pushed straight through that 200 moving average line here, which is often a good indication of the bottom of the market, as you can see from the 2008 GFC. But I do believe we are going to see another quite a big leg down. Okay. Let's have a look at the Dow Jones. I mean, the Dow Jones has recovered quite a lot, to be honest. It's come back to that mid-regression line. But I honestly don't understand how this has really happened. I mean, basically, what's caused this is by no doubt the big stimulus packages that have been released by the feds, pushing a ridiculous amount into the economy. But I don't know how long this level of stimulus can continue going on. I mean, it was a bit of a fake visage from the 2008 market. We never really fixed the problem. It was just a matter of just printing more money, pushing money into the economy and inflating asset prices. And again, they've kind of just gone and pushed a huge amount of stimulus into the economy again. How long it will take to pay off that debt? I mean, US's debt is already at, I think it's at about 110% of their GDP, which basically means everything produced in a year their debt is larger than everything produced in a year. The amount of interest that they're paying on that debt, I can honestly see this leading to a massive, it could even lead to the US dollar losing its strength, not becoming the world reserve anymore. It's going to have massive market implications. I'm going to skip past this one here, which is silver. I'm going to come back to it, but just relating back to that, the USA has got 505,000 cases for the coronavirus. There's 18,000 deaths, more than any other country. Obviously, we're aware that some of this data might not be, purely accurate. There's a lot of conspiracy coming out, or, it's almost fact that China's data is not really accurate. But nevertheless, this is a huge number. There's unprecedented amounts of unemployment in the USA as well. People are talking that we might reach a ridiculous 30% unemployment rate is a potential. 20% is not even out of the scope to consider either. And this is going to have massive implications going forward. Okay, so I feel like it's definitely plausible that we see another massive leg down. We could even exit the bottom of this kind of regression line, and definitely possible to head towards that 200-day moving average, just like we did in the 2007-2008 GFC, broke through that 200-day moving average. I just honestly think there's going to be quite a bad leg down to follow. So a lot of people are kind of going, these are big opportunities, big times to invest. For example, in the ASX 200, it's broken that regression. This is unseen territory, guys. We have never really seen a pandemic as well as a due global financial crisis before. Just hold tight, I would say. I mean, it's not advice, but just my personal opinion is I do think we are going to see lows again when these companies start reporting their earnings and the full effect of this pandemic and crisis actually come into play. Okay. This chart here is a chart of silver, a very interesting chart. Sorry about this, I probably should upgrade. I'm actually on a different account to my personal charts just because I don't want to have so much going on. I just want to keep things quite simple. So I logged into a different account to do these charts, but we'll continue on anyway. So basically with this model here, silver's price has absolutely taken a beating since 2011. We're at, historical lows, even the prices that we saw during the 2007-2008 GFC. Now, silver and gold are often seen as safe haven assets because they have a storage of value. They have it's a physical property. It's not a piece of fiat currency that you can pretty much scrunch up and burn away, chuck in the bin. It doesn't really have value other than people are willing to exchange it. Okay, I would probably say that gold is a better storage of value, but nevertheless, guys, silver is very good as well. One thing that I want to show you is, I'm going to exit that because we got two of those up. Give me 2 seconds. One thing that I want to show you is there's a ratio in history between silver and gold prices. Okay. And usually, as you can see, 1 ounce of gold will get you, maybe on average 50 ounces of silver. Okay. So obviously gold's worth a lot more, but they have this ratio. Now, it's seen as low as, maybe the 20s, but right now we're in unprecedented blowout in the ratio. Okay, 1 ounce of gold is getting you 110 ounces of silver. Okay, that is a huge number. We haven't seen that since before 1950. Perhaps we saw it closer in the 1990s, but nevertheless, that's a massive blowout. Okay, for those people that are looking to, I suppose, put some of their wealth into a storage of value asset that's a bit more traditional, we're going to look at another storage of value asset, Bitcoin. But I do think there is an opportunity here to look at getting some exposure to silver. Okay. When this comes back down, and it may not, it could blow out even higher, but we can only go off what we previously know when we're making investment decisions. What we might have an opportunity to do is get some exposure to silver around this point here, and then when this comes back, convert that to gold. Okay, I personally would prefer to hold gold. I do like gold more, but when there's opportunities like this, with common ratios that do tend to come back in, there is an opportunity to pick up an amount of silver, wait for this ratio to come back down, and then sell it into gold and get quite a nice percentage gain. Okay. On that note, let's just have a little bit more of a look at silver. So it's been in this kind of consolidation period since around 2013. It's been just kind of bouncing up and down. We're at the very bottom of it. There's a triple bottom, 1, 2, 3. There's a nice head and shoulders pattern occurring as well. I won't dive too much into that. But overall, I don't really see silver coming below $10 an ounce. We're sitting at about $15 right now. I think it's a really good opportunity, particularly if you're looking to preserve some of your wealth, get it into storage value, to pick up some silver, hold it, longer term, convert it back into gold when we see the ratio come back down, and hold that gold long term. A lot of people do this. They put gold in their portfolio to protect themselves in bad times. So let's have a look at gold now. What I'm seeing in gold is gold tends to like to, bounce up and down this consolidation period when GFCs or financial crises hit. After the crisis, we usually see a massive rally in gold. Okay, there's a couple reasons for this. One, because what do the governments do when we go into crisis? They print money. What does that do to the value of people's dollars in their pocket? It devalues it. Okay, so if your dollars are worth less, if you compare those dollars value to gold, gold is going to be worth more. And that's one reason why we get a massive rally up, okay? Because it's actually just the value of the dollar losing its value compared to something that's a storage value asset like gold, which retains its value, okay? The other reason is people flock to these kind of investments because they're worried. They think, the currencies might default or the banks might blow up or, whatever, not literally blow up, but you know what I mean? They might start to default and, they want to go to something that they know has an intrinsic value, okay? And that's why we see this massive rally up. Now, from about 2013, we've been in this consolidation period again, and I would say, just this year we've actually just broken out of that consolidation period. Now, look what happened last time when we broke out. Let's pull this back a bit further. Actually, look what happened last time when we broke out of this consolidation period. Gold had a massive run up, and that's after and around about the time of the GFC 2007. It had a massive run up. This is during the crisis, and it kept going up and up and up. Reached a high of about $1,900 an ounce, maybe $2,000 an ounce. Now we've broken out again, and I don't really think we're going to see this territory again with the amount of stimulus that's gone into the economy, devaluing the value of the US dollar. I think this is due to continue running up. So some people might just want to buy gold. And not worry about silver. Some people, I've been talking to a lot of the people in my network, and we're going to go through who some of those people are. They're all in the Discord. I rely on them for, to check my due diligence. I do a lot of my own research, and then I refer it back with these guys who have been in the financial markets for 40, 50 years. Some of them are not really interested in silver. They just don't really know much about it. They don't like it. But nevertheless, they all agree that yes, it's heavily undervalued. Yes, it has a storage of value, and it could be a really good play. Picking up some silver now while silver's so undervalued or gold's so overvalued compared to silver, selling it back for the long run. Okay. Now, another thing that we can go through today, and before I actually go into Bitcoin, I just want to go through that. Yes, Mining Store focuses a lot on cryptocurrency and mining, obviously, but we also focus on pretty much everything and anything. We literally have a dedicated channel to the coronavirus right now, which has been absolutely amazing. Credit to Wolfenstein, one of our community managers, who's actually been posting daily, multiple times a day on any single announcement that comes up, whether it's a potential cure, whether it's a potential way to keep your family safe, good articles, good research that's been coming out. There's an incredible amount of knowledge in here. It saved me a ridiculous amount of time. I'm so happy me and Kel built this community because I'll often wake up in the morning or have a check-in in the afternoon or before I go to bed and just pretty much get updated on every single thing that's going on, whether it be about the coronavirus, whether it be about Bitcoin price speculation, which you can see a lot of guys are doing in here, whether it be about altcoins, stocks. Obviously, one of our members here had quite a nice win. Really cool, actually, in investing into esports. I think that's going to be huge. Everyone's in isolation right now. A lot of people are flocking to gaming to keep themselves sane. I think after this, isolation period, esports could actually have a really big leg up, and I might do another podcast or webinar to cover that later. But the moral of the story here, guys, is there's just a ridiculous amount of value in here. You learn learn so much just by being in this Discord. I suppose when people first come, they can say, whoa, there's a lot of information. It's hard to keep on top of. But when you get in the habit of it, just checking it, once or 2 or 3 times a day, the more value you get from it, the more you're going to want to check it. It's an incredible way to get a coverage of all market knowledge. Now, the people that are in here as well are absolutely incredible people. Jules has been with us for a long time. I consider him an analyst, so I've given him the analyst name. But basically, he will post a lot of his charts, a lot of his recommendations. We have private equity managers in here. One of the guys called Mad J is a huge contribution to the Mining Store Discord. We've got Grant in here. He's a CEO of Mind Digital, our partnered cryptocurrency exchange. Definitely set up an account with them, guys. Claim $50 free for signing up with them as well. Jagerman, he's the Loki dev. Just could keep going on and on and on about the value in here. Orsham, incredible guy, works for State Street, gives us a lot of intel. I can't say enough how important it is to be in here, guys, particularly if you're following the Mining Store. There's even a channel for property. This is a really good channel. We created this recently. Obviously, we feel like there's going to be a bit of a downturn with a lot of people losing their jobs and things like that, which is incredibly unfortunate. But it does create opportunities for younger people or anyone really looking to get into the property market. Now, we're not preying on people like that, guys. This is an investment group, though, and we're just looking at things where opportunities are, trying to make the best out of bad times. Okay. But that's enough for the Mining Store Discord. I just wanted to go through, what this Discord is about. You'll meet an incredible amount of people in here. You'll be able to cover off a lot of your theories, improve your understanding on a range of topics, pretty much anything and anything that's happening in the world. We will create temporary channels for, such as the coronavirus, because it's so important right now. And there's a whole range of how you can set up passive incomes through mining, everything like that too. Okay. Let's get back to looking at some charts. The last thing I just want to give you guys, obviously through Mining Store, we can't really help you to, make trades with silver and gold and things like that. But our partner, which me and Kel also co-founded, is Forex Kings. And that's run by Tony. Tony is incredible at his analysis and his ability to pick trades. He offers a lot of mentorship and education too. But have a look at his results lately. He's achieved just since July last year a ridiculous, I think we're getting pretty close to 8,000 pips. And in comparison, if you were putting on a standard one lot trade, you'd be looking at about $112,000 profit just from, these are his trades. You don't have to follow them. He just posts what he's trading. It's not financial advice or anything like that, but you can see what he's trading. And yeah, that's a really big number. I've been following these. I don't invest in Forex as much as I do crypto, but it's a really nice side income for me too, I guess, and something that I strongly recommend you guys check out. We do have a 30-day trial. I might even put the link for that in the bottom of this video. And if you want to check that out, you can. But really good analysis. You can even look at the analytics of all the trades that we've placed, which trades, which currency pairs we trade a lot. Obviously, gold's been a killer. Tony's very good at trading gold. Dow Jones, which ones we've had successful trades in, which ones we haven't had successful, so we avoid these ones. We do, Tony does a lot of analysis to improve his trading and the service that we offer. And I strongly recommend, particularly during this time of isolation, that you guys get into this, try it out. We've had probably about 100 new members join us since isolation started, and a lot of those guys have made quite a bit of money in this time, which is really, really good to us. We feel very proud of it because a lot of people are struggling at the moment, and to offer this kind of service for them where they can actually learn a new skill and potentially make some more money is pretty awesome. And credit to Tony for that, to be honest. Really appreciate what you've done for our members there, Tony. Let's look into Bitcoin. There's a lot going on in this chart. I'm just going to delete that was a death cross that I was highlighting. But basically, we're coming into the Bitcoin halvening. Okay. For those of you that don't know what this is, basically it's with the miners, which we invest in a lot as well. the Bitcoin halving is when the reward for those miners, to say, for example, they're getting, it might be 12 Bitcoin per block that's discovered, that halves, okay? And that reduces the new supply that's pushed into the market. There's only ever going to be 21 million Bitcoins in circulation. At the moment, there's about 3 million that are not in circulation right now. And the only way they go into circulation is by the miners solving the blocks, which happen every 10 minutes. Now, the reward that those miners are going to get is about to halve. And as you can imagine, that's probably going to push the price up. I'm actually going to bring across this chart here. And this is one that I actually went through not too long ago. Basically, let's have a look at what the Bitcoin hash rate looked like and what happened to the price of Bitcoin on the first halving in 2012. Okay, so as we can see, the hash rate was pumping up, getting a lot of attention. Then once the halving hit, everyone obviously went, hey, my reward's just halved. I'm gonna slow down and turn off my miner, or maybe people just stop buying new ones. Obviously, some people turned off because the actual network hash rate reduced, and then all of a sudden, and this is the price of Bitcoin. It just kept on going up, and they go, well, what if Bitcoin's price is going to keep going up? Then I may as well turn my miner back on. It's getting heaps of value, and so the hash rate came well back up. Okay, so that's a bit of analysis of the first Bitcoin halving. Second Bitcoin halving, we saw this consolidation. Nothing really much happened from the halving. People were just kind of chilling out like, this is a long-term investment. But then price obviously broke out of that consolidation, and so hash rate followed as well. Now in 2020, we're leading into the halving again, but I would say Bitcoin's price is heavily undervalued. I still think, as I was going back on these charts here, I still think that we will see another leg down in the stock markets and a lot of asset liquidation, which probably will lead to a Bitcoin liquidation as well, just like it did before when we saw this market downturn. So that massive drop in the stock markets did the exact same thing to Bitcoin's price. It's just a global liquidation. Everyone's selling off their assets to cover margin positions or they're fearful. Okay, but Bitcoin's recovered extremely well, guys. It's almost pushed through 7,300. It broke down at about 7,800. That's where the market broke down from the stock market capitulation. It's almost recovered all that price. But look at the Dow Jones and even the ASX. They're both still sitting seriously low, and I think they're going to go even lower. This could be a really good opportunity for those people who have never really invested in Bitcoin before. Pick up a small amount of Bitcoin, get some exposure to the market, get some value, storage of value assets. Financial markets could kind of blow up here. I mean, I'm not calling Armageddon or anything like that, but things are not looking good, and printing more money just doesn't seem to be fixing any problem. It's just delaying the inevitable, and the more that we do that, I think it's going to be a worse result. So Bitcoin is something that I've had exposure to for a long time now, well back here, but it's a great one to get exposure to and increase getting exposure as we see these market dips. Now, personally, I think that I'm sitting on the sidelines right now. I actually sold a lot of my Bitcoin at about 700-800. Maybe it was a bit higher just before this market downturn. I've been sitting on the sidelines since. Made a couple of in and out trades here. Lost some, won some. I'm up, but at the moment I'm actually sitting on cash right now in US Tether, and I'm waiting to get back in. Now I think we will come down to if we start seeing sub 6K, I'm going to be definitely starting to pick up more exposure. But I might even have to get it earlier because I don't want to miss out on after this Bitcoin halving comes through. History tells us that price usually tends to go up and quite fast. Now that as well, as I just said before, we've also got people really starting to question the current financial system that we're in, and Bitcoin and cryptocurrency is a great alternative. I think that next 5 years, particularly even next year or two, could really see some light on this market. It's definitely proven itself. Back in 2017 during the bubble, people just thought it was a scam or people didn't understand it. During 2018, I think it really built some value and built a really big community and got the attention of some big time investors. And now we're really starting to see institutions, everyone really understanding the value of blockchain, and also the general public looking for an alternative system. I think as you can see, this is a very low price in history. I think anywhere here, particularly if you've never invested before, worth picking some up, getting involved, joining the Mining Store Discord, absolutely, even before investing and talking in these channels, whether it be general chat and just asking questions about cryptocurrency, or whether it be in the actual trading chats, just posting your ideas or some charts or asking for help on some charts, is definitely well worth your time. So that's probably most of what I want to go through today. As I said, it's just a couple of things that I'm looking at. I'm not claiming that I'm some expert analyst that's been in the markets for 50 years and I can tell you exactly what's going to happen next. That's not at all what I'm claiming. In fact, I actually rely on a lot of other people for my analysis. I do my own research and then feed it into the Mining Store Discord and get verification on that. Or I'll just ask some of the smartest people that I know in here what they're thinking. We'll all collate our ideas together and then we'll put it into the public channels. So that's what this is all about, guys. Anyone can do it. Anyone can, build an investment portfolio. And I really, it's been awesome. We've had a ridiculous amount of new members. I'm still learning. Everyone, familiarizing myself with everyone. As you can see, there's a lot of members down on the side here, which have joined us. Well over 500 members. But yeah, there's some people that are in here more than others, and there's some people that I rely on more than others too, and you can as well. So that's pretty much it for today, guys. Just a bit of a quick market cap. Enjoy your Easter break. I'll be doing a couple more of these, and I'll be doing some co-hosted ones with Tony from Forex Kings. We're going to be looking at things like corporate debt crisis in the USA and really start to pick about what's going to happen in the next 1 to 2 years for financial markets. If you guys have any comments, questions, anything you want me to cover on that in the next episode, leave it below. Other than that, guys, stay healthy, stay safe, and I look forward to seeing you in the Mining Store Discord. Take care, guys.